On Thursday, the stock market fell more than 500 points on the Dow, but there were ways to make money by buying, and I'm going to show you what those were and how to deal with a stock market crash. Plus, I'll do my normal market analysis. Is the weakness of Thursday going to move into the broader market? Are we going to see more weakness? Well, I'll give you my analysis. And then finally, I'm going to look at the day trade of the week on XXII. All right, so as I said, the stock market had a pretty bad day on Thursday, but there were stocks that went up, and they're not that hard to find. There's two things you can do when the stock market is crashing. One, buy inverse ETFs, and I'll show you in a moment what that looks like. And then number two, buy alpha stocks, and I'll also describe for you what that looks like. Now, some of the common inverse ETFs, SDS is an inverse on the S&P 500. SQQQ is an inverse on the NASDAQ 100. And then for Canadian traders, T.HXD is a leveraged ETF that's inverse on the Toronto Stock Exchange. And I'll show you a chart in just a moment on how the SQQQ rose quite nicely while the overall market was dropping on Thursday. But the other thing, and really the thing that I prefer to do, is to buy alpha stocks. Alpha stocks are characterized by abnormal volume and very strong liquidity and strong price gains. And so every day, no matter whether the market's going up or down, there are always a handful of these alpha stocks. And even when the market dropped as it did on Thursday, there were a few stocks that made dramatic gains. The only ones that made those big gains are stocks that had these alpha characteristics. So let's dive into the charts and start with a look at the SQQQ. Here you can see that the market for this inverse ETF rose dramatically. And right in here, when it broke out to new highs for the day, from optimism through resistance, and then went into a very strong upward move. Now remember, this is an inverse of the NASDAQ market. So this was going up while the NASDAQ was going down. So that's a very simple way to take advantage of market weakness. You know, you used to have to short the market or buy put options. Nowadays, it's so simple, you just buy these inverse ETFs. But again, my preference is to always just focus on alpha stocks. So one of the big alpha stocks on Thursday was this one, Candle Therapeutics, CADL. Traded very actively, hundreds of thousands of trades. And the characteristics are pretty easy to see. This is the 1 minute chart. This is Thursday's trading. This would be Wednesday and this would be Tuesday. And you can see that the volume traded on Thursday was dramatically higher than the previous days. That's the alpha component. Once you see a stock that has alpha, then you want to watch for the pattern setup. So it's very difficult to see here because the scale got so skewed, the stock made such big gains. But there's a little pink and yellow dot there. So that's my action candle indicator. And those of you that have been watching this video week after week will know that that's a very important indicator that I use to find these stocks and time my entry. Subscribe to the YouTube channel here and make sure that you're always getting these updates because I'm doing these videos every week. All right. So there is the breakout through resistance from optimism with an action candle, and the stock went dramatically higher, in fact 300% higher in a single day, while the Dow dropped 500 points. And so what more can you ask for? When the market's dropping, trade alpha stocks or those inverse ETFs. All right, let's get into the market analysis now. Because of that weakness on Thursday, I think we have to be a little bit cautious that maybe more weakness in the market might be coming. So let's jump into the Stockscores website. Before we talk about the S&P 500, want to remind you that I have some upcoming webinars. These are free. So day and swing trading is on Wednesday, how to invest in the stock market successfully on Thursday, and then how my tools and education can help you do better in the market on Saturday. These are free. You just click on that, and then you can register for the webinar. When you register, you'll get an email with the link immediately. If you don't get that email, check in your junk folder because they sometimes land in there. All right, now let's get into the analysis. Here's SPY. And here's my concern on this S&P 500 chart. You can see this upward trend line was broken on Thursday. Now it's not from a falling top. It's not breaking the weekly trend. If we jump to the 3-year chart, you can see that we are still in the upward trend, but it is worrisome. It could be something like this, where it's going to then lead to what was 3 months of weakness. So this is our first warning sign that we may be seeing the start of some profit taking. I'm not yet too worried, again, because we haven't really seen the breakdown. But what I'm going to do next week is watch the intraday chart. So let's go to like a 30-minute. And if we start to threaten this upward trend line with some falling tops and breaking that upward trend line, again on the 30-day, 30-minute chart, you might want to get a little more defensive and think about trading some of those inverse ETFs, as I talked about at the top. And there's lots of them. The most actively traded is SQQQ on the NASDAQ and SDS on the S&P 500. Let's jump into the NASDAQ. QQQ is the symbol. And very similar sort of situation. The daily upward trend is rolling over a little bit. And this actually looks a little worse than the S&P because the NASDAQ has essentially been sideways for about 6 weeks. And now if it starts to move down through this floor, then I think you want to be a little bit defensive, particularly with those really large cap tech stocks. You know, a few weeks ago, I put out a cautionary note on Nvidia right on this day because it was making what I call a bursting bubble signal, where the trend had gone parabolic, hit new highs, and closed below the open. And my sense was it's probably topping out there and to watch for a further breakdown. Well, it's been doing pretty bad the last 6 or 7 days. And if it starts to move down through this 850 zone, we could see it pull back a little more. So that would be one vehicle to consider on the short side. And the way you can do that is, just as there are inverse ETFs on stocks, there's also inverse, I don't know what they call these. I guess it's an ETF on Nvidia itself. So this goes up, NVDS is the symbol. It goes up if the shares of Nvidia go down. Now it is leveraged, so it will move up 1.25 times as quick as Nvidia goes down. And so a trader can keep an eye on that. It is a trading vehicle. It's not really an investment vehicle because it suffers some time value decay each day as it gets rebalanced. But it looks to me like this could start to wind higher if Nvidia does fall. Let's jump into the small cap stocks. Small cap stocks looking a little better because they didn't rise as much. And so I think one of the things we're seeing is a rotation out of the large cap tech, stocks like Nvidia, and into some of the smaller cap markets and also the commodity sectors, which we'll talk about in a moment. So there you see optimism is still in place on the Russell 2000, the small cap index, and it's building perhaps a new trend here. It has lots of ground to catch up on with the overall market because it really didn't keep up with the S&P or the NASDAQ. But this one has way more upside until it hits resistance way up here. And I think we could see the market rotate into this if the bond market can stabilize. We'll talk about the bond market in a moment as well. Let's take a look at the Canadian market, which did better than the US market because of its heavy weighting in things like gold and energy. And gold and energy have been doing well lately, and thus the Canadian market is doing very nicely as well. Now it is right at some long-term resistance, and so we may see this stall a little bit and then try to break out, or we may see it stall and roll over. We got to watch, and of course I'm doing this analysis every week. Again, make sure you're subscribed to the channel so you always get my weekly analysis of the markets. Well, let's look at gold and oil. Start off with gold. You can see the nice breakout that we had back here, abnormal volume, abnormal price action, and that started the upward move. I think it's a hold. It's not really something I'd want to buy here because a lot of these stocks in this sector, the gold miners, the precious metals stocks, have made significant gains, and I think that they're a little risky, but if you're in them, I do think that they are holds. How about oil? USO, again, nice rally coming into some resistance where we may see it stall in the short term. However, I do like the rising bottoms. And I think if we can get through this resistance zone, perhaps we go sideways here a bit, then we should move back up to those highs, which will in some ways help that inflation question, because as these oil prices go up, it reduces spending and perhaps helps that inflation aspect. Although there's inflation, of course, in the price of gasoline and oil when these are going up, it can have a little bit of a holdback effect on the overall economy, which is something that the central banks are really concerned about. We'll talk about that in just a moment when we look at the bond chart. But first, let's take a look at the currency chart, GBTC, to get us started. This is the chart of Bitcoin. It's had such a great run. We've been bullish on this for a while, but I've lowered my rating to neutral lately because I'm starting to see some profit taking, and that's healthy. You know, there's our trend line. We're way above the trend line. It would be very healthy for us just to come back to the trend line and then hopefully resume the upward trend. I think it's risky here. I think that there's probably more weakness coming, but I'm still long-term optimistic because the trend is up. Here you can see the short-term chart. This is called a pennant pattern. And if the market were to break up from the pennant, then we might make another leg up. But for now, I think you got to be a little bit cautious with it because it does seem like the momentum is slowing. US dollar, if we look at the 1 month chart, you can see the trend is up, a little bit of a pullback this week, but still moving higher. Now here's the important chart that we should all be watching, particularly those invested in the smaller cap stocks. This is a chart of the Treasury bond ETF, and you can see that the sellers are in control. So that means the bond market is going down, and it just this week broke through some support. So this is a relatively negative chart, which means interest rates are rising. The prediction for the future direction of what the Fed does with interest rates is getting a little more pessimistic. There's this thought that maybe we won't be seeing a drop in rates like the market had hoped. The bond market tends to predict what the Fed does. And the market was really hoping that we'd get 3 or 4 rate decreases from the US Federal Reserve this year. That's starting to be a little bit questioned based on what I see in the bond market. Everything changes if we can break this downward trend line to the upside. But until it does, we want to be fairly cautious with the bond market, and thus it's going to weigh a little bit on the stock market. So my ratings then, neutral on both time frames, or neutral on the short-term time frame, bullish on the long-term time frame for all US stocks. Canadian stocks look a little better, again, because of that strength in gold and energy. And you can see gold, I'm bullish on both time frames. Oil, still only neutral long-term because it isn't really in a strong trend yet. But the short-term trend is bullish. The same can be said for the US dollar. Bitcoin, I've dropped my rating to neutral. Not really a sell, I'm not worried about it in that way, but I do think it needs to take a little break after some big runs higher. And bonds, I've gone back to being bearish on both time frames. All right, well now I want to take a look at the trade of the week. This is a stock that we traded in the Stockscores active live service, where I have algorithms, computers analyzing the entire market in real time, and participants in that service can see that analysis and identify these alpha stocks as well as the entry points. So one of the key criteria there is the action candle. This is the little pink and yellow dot that you see on these charts, and of course the scale here is a little bit hard to see. You might have to really put on your sharp eyes to see this, but the first break from a pattern with an action candle was right there, just a little after 10 o'clock. And then we had another break right here. So that's buy signal number 1, buy signal number 2 right there. And then later in the day, there was also this downward trend line that was broken with an action candle. So anytime we get action candle breaks through resistance on alpha stocks, which have that abnormal volume, that's pretty good buy points. And both of these trades worked quite well, even though the market wasn't stellar on Friday. There were a few trades like this, and XXII was one of the better ones. Well, hope you've enjoyed this week's Stockscores Market Minutes. Reminder to register for those free webinars. I'll give you 1-hour lessons on day trading, swing trading, position trading through the week. You can go to stockscores.com to learn more about that. If you've enjoyed this video, click on the like button, subscribe to the channel, and most importantly, trade well.